One of the most popular strategies for investors in 2024 and 2025 has been buying new build homes because the builders are providing ridiculous incentives to buyers. And the fact is that is not going to change in 2026. So I expect this to continue to be a great opportunity for investors like yourself. But one of the problems you might run into is analyzing the builder incentives can be kind of tricky. So we are going to dive into an actual new build home in College Station built by Stylecraft. We're going to break down the incentives that they're providing and determine how we can use those incentives and appropriately analyze this buy and hold investment. Of course, we're covering all of that and more on your favorite channel, Investing in Bryan-College Station, Texas, where it's my goal to grow your wealth through real estate right here in Aggieland. So let's jump into this beautiful Stylecraft house. First and foremost, if you are looking at Stylecraft, I'll have a link to them down below. They are a regional builder. They are one of our entry-level builders, and they provide some pretty great incentives, and they have been for the last few years. This specific home is 15234 Stillwater Meadow Loop. It's a long address for a house that's only priced at $299,900. We'll call it $300,000, which is well below where they've been selling these before. It's actually a $6,000 price drop, and it's well below our median price of $340,000 in College Station. So this is a pretty good deal as is, but the builder is providing incentives. So the builder in this case is providing $20K your way. This is a common incentive that Stylecraft has put out over the years where they're going to give you cash and you can either buy down the purchase price, cover your closing cost, or buy down your interest rate. They also will generally allow you to negotiate for things like appliance packages, which means all these houses come with dishwashers, ovens, above the range microwaves. What they don't always come with are washer, dryers, and refrigerators. So generally we can get that included with this deal. No surprise here, deals like this don't last that long. This house went under contract within 7 days of Stylecraft offering this great incentive. But the good news is there are other deals out there. If you want access to those, down in the description below is a link to my Deal of the Week newsletter. Go check it out. So let's look at the house and then look at how to analyze it. So the house itself is a 1,400 square foot, 3-bedroom, 2-bath, 2-car garage, nicely laid out. We've got LVP floors. We have a decent sized kitchen with a large island, granite or quartz, nice cabinets. They're not custom cabinets, but nice cabinets and a nice large pantry. In the bedrooms, we're gonna find a nice large walk-in closet, dual vanity in most of the bathrooms. Primary bathroom will have the large walk-in shower, and your secondary bathroom, large vanity top, and we'll have a tub shower combo. In both cases, you're looking at a tile surround. Carpet in the bedrooms is pretty common, small back porch, and a decent sized backyard. All of this makes for a really good buy and hold rental property. So let's look at some of the numbers. Before we do, quick point, this is an HOA community, so we gotta keep that in mind. $46 per month is the cost of the HOA. When I analyze properties, I like to use calculator.net. This is a really good calculator to use. It's a great way to do quick analysis on a rental property, and I'll have a link to it in the description below. I'll also have a link to the homes.com, which is my go-to for searching for homes for sale. If you like that, you can check that out down below as well. All right, the calculator itself. We're gonna go through purchase price. We're gonna go through the loan. We're gonna talk about your reoccurring operating expenses, your income, and then what it would look like to sell the property. All of this will factor in, be computed and analyzed, and then we'll know what our return is. Purchase price, pretty easy, $299,900. We will be using a loan. I usually see that 25% down is what's required to at least break even. So we'll start at 25% down, and that brings us to our interest rate. Now, this is where we're gonna look at those new builder incentives. You have $20,000 that you get to use in this property. In general, I think the first $10,000 should be used towards your closing costs. Cost about $10,000 in closing costs to buy a house, and it would be really nice not to have that out-of-pocket expense. The less money we can put into the house, the higher our return will be on that investment. So I recommend put the first $10,000 towards closing costs, then use the next $10,000 to buy down your interest rate. So let's talk about what that looks like. As a rule of thumb, buying down the interest rate, the math is that 1 point, which is 1% of the loan, will buy down a quarter of the interest rate. So in this case, our loan, we're gonna call this $300,000 by 0.75 is $225,000. If we look at 1% of that, of course, we're looking at $2,250, and we've got $10,000 to play with. So we divide 10,000 by 2,250, and we get 4.44 points that we have to put towards the buy down. Then we take those points, right? Each point buys down a quarter of a percent. So we multiply that by 0.25, which says that we can buy down the interest rate by 1.1%. My investors right now on a 30-year investment loan are looking at about 6.75 to 7%. Again, this is being recorded January 2026, so your rates may vary depending on when you're watching the video. But the point is, we can simply subtract that 7%, we can subtract 1.11 and come up with 5.9%. So now we've taken the builder incentives, applied it to closing cost and an interest rate buy down. One of the reasons why I do the interest rate buy down, and there's a lot of people who have mixed opinions on this, but I do believe that it gives you a better opportunity at cash flow, and cash flow is very important for holding a property long-term, which is how you grow well. All right, operating expenses. I've had videos on this before, so I'll go kind of quick, but property tax, a good rule of thumb is 2% of the purchase price. Insurance for a new build, usually we're seeing $1,200 to $1,800 a month for a house like this in College Station. I'm putting it at $1,800. HOA was $46 per month times 12, which is $552 on the year. Usually I recommend $150 to $200 per month in maintenance expense. That includes both your operating maintenance and your capital expenses. Capital expenses are things like roofs, water heaters, HVACs, when you have to replace major systems. Because this is new, because you have a warranty on all your appliances, you have manufacturer warranties on your ACs and your roof, and you have a builder warranty for the first year. I think that for the first 10 years, your average is gonna be a lot lower. I think you're looking at $100 a month in maintenance or $1,200 for the year. That's one of the biggest perks of buying new. No other cost because your tenants are covering lawn care and utilities. Our monthly rent right around $2,200 for a brand new build. You are in a sought after school district, in a sought after town that is College Station, in a brand new house in a residential neighborhood, so your vacancy rate should be low. I'm putting 5% in here, and then I'm gonna put 3% in for the management fee. Here's my little sidebar on that. I recommend you self-manage. And quite frankly, self-managing can be kind of difficult. The hardest part about self-managing is filling vacancies when they come up. The good news is you have met a real estate agent who does that for his clients. Hello, my name is Greg Schwartz. I work at the Schwartz Realty Group, and we will lease out your property for you. If you put 3% aside every month, that will more than cover what we charge to help fill a vacancy. 3% is well less than the 10% that most property management companies charge. So you're saving money. And in my opinion, you're getting better tenants, you're getting faster, you're getting higher rent rates. But that's a topic for another day. Management fee, 3%. Home appreciation, I like to put in 4.5%. The median home appreciation since 1990 in Bryan-College Station has been 4.96%. So 4.5 is actually conservative. Am I talking too fast for everybody? Told I talk too fast. Holding length, 10 years, cost of sale, 7%. That covers realtor fees, closing costs, whatever. When we run our calculation, we see an IRR, which is a fancy way of saying your annualized return, your annual return, of nearly 13%. We see negative cash flow of $100 a month or $1,200 a year. That's not super attractive. Now, in my opinion, if you're within $100, you're basically break even. But I know for a lot of you out there, you want to be actually break even on a property, and no problem there because it's pretty easy to come down here and just increase your down payment to see what it would take to have this property break even. Let's bump it up to 30% down, puts you at negative $13. Let's go 32% down. Let's figure it out, guys. It's that easy. We're now positive $20 a month. So if you have $95,000 to invest, you can invest your money and get a 12% return on a brand new built house, very low risk, right? So this is a great risk adjusted return. Low risk in a sought after school district, in a sought after town that sees strong appreciation with a low maintenance property because it's a new build property and you're still getting 12%. I don't know if there's an investment right now that is this passive that provides this level of return. Let me know if there are other opportunities out there that you see. I'm always curious to see what other investors are seeing in their markets, or if you're investing in Bitcoin or gold or whatever, I want to hear about that as well. Point is, calculator.net is your solution to calculating how to determine your return on a buy and hold investment, particularly new builds and their new builder incentives. I usually recommend covering the closing cost and then buying down the interest rate with any kind of cash that a builder is throwing your way. That was a lot. I hope that this provided you some value. If it did, hit the like button. If you want more videos like this and you want market updates, hit the subscribe button. And if you do nothing else, until next week, you take it easy.